and all the same. And for those of you away, I hope you have a great time. We just did, so that's good. Okay, so I'm going to get stuck straight in while I've got the momentum, and let's have a look at what's happening across the country and New Zealand with regards to the market. So Australian home owners gained a $59,000 wealth boost from rising house values in 23-24 financial year. And Perthians have enjoyed a lot more, which we'll talk about. So let's just have a quick look at what has happened. Sydney has had a 0.5 monthly growth, 1.1% quarter, and a 6.3 annual growth, which is not bad for Sydney, considering they had, I think, a plateau last financial year, or just a very moderate growth. The year before was sensational growth, like 20+%. So yeah, Sydney's bounced back. Melbourne, 0.2 deficit and a 0.6 deficit for the quarter, and a moderate 1.3 annual growth for Melbourne. So Melbourne's doing it tough, dropped to third place in the medium house values, to 783,000, with Sydney at 1,170,000 median house price. So Melbourne's doing it tough, but obviously they had some of the sharpest increases, so it's not completely bewildering. But they're still holding their own, actually. Brisbane is doing extremely well with 1.2% growth for the month. This is June, of course. Quarter, 3.7, very respectable. And of course, the 15.8% growth for the year, and that's 859,000, which puts them in second highest average median house price in Australia of 859,000. Who would have thought, huh? Brisbane. So Brizzy's going along really, really well. Adelaide, we're looking at 1.7 for the month, 4.7 for the quarter, 15.4%, putting them in fourth place. Median house price, 767, 10 grand above Perth. Can you believe little old Adelaide, more expensive than Perth? Probably won't be for long. And then Perth, of course, 2% growth, which is the biggest and best for the month, 6.4 for the quarter, which is also the biggest and best, and 23.6% for the last 12 months, which is the biggest growth we have had in probably, I'd probably go as far as to say 208. So, 14 years, a long, long time, put it that way. Combined capital cities, 0.7, 1.8 for the quarter, and 8.3 growth for the 12 months. Combined regional, 0.6 for the month, 1.9 for the quarter, and 7% annually. That's combined regional. And national figures are 0.7 for the month, 1.8 for the quarter, and 8% respectively for the whole of Australia. But obviously there's two speeds there, with the medium-sized cities being Adelaide, Brisbane, and Perth, versus Sydney and Melbourne, lagging behind somewhat. So that's interesting. Let's have a look what the CoreLogic report says. So Australian dwelling values increased a further 0.7 in June, taking growth to 8% across 23-24 financial year. This is the equivalent of 59,000 increase in median dwelling value in Australia, which is now 794 is the average price in Australia. The annual rise was in stark contrast to financial year 22-23, when CoreLogic National Index was drawn -2% in that year. Annual growth was weighed down by a -7.5 drop in values in the 9 months following May 2022, when the cash rate target started to rise. So yes, we've had an exceptional year in comparison to 22-23. Despite the strong annual gain, the trend growth rate has eased since the highs of mid-2023. when the quarterly rate of change peaked at 3.3%. The most recent June quarter saw dwelling values rise by 1.8%, which is roughly in line with the March quarter, 1.9%, and December quarter of 1.8%. CoreLogic research index has found a groove rising between 0.5 and 0.8 per month on month since February. Melbourne and regional Victoria values down -0.2. Hobart is also relatively flat in June with just a 0.1% growth. Strong conditions have remained a feature of the mid-sized cities. Obviously, Perth, 2.2 and a 23%. Adelaide, 1.7 and a 15%. Brisbane with a 1.2 and a 15. Regional markets have shown a similar trend to the capitals. The growth trend are reflected in advertised stock levels, with the strongest markets continuing to show a severe shortage of homes available for sale. We know this. Over the 4 weeks ending June, the number of homes advertised for sale in Perth were 23% lower than at the same time last year and 47% lower than the previous 5-year average. So stock levels are diabolically low. Strong housing demand, despite downside factors, is also evident in the estimated volume of home sales. This is interesting, folks. Pay attention. Nationally, the annual number of homes sold was 8.6 higher than a year ago and 4.8% above the previous 5-year average. So the largest jump in annual sales relative to the historic 5-year average has been Perth, where a number of homes sold last year was 29% above average levels. So, to be noted, even though we've got low stock levels and prices are, rising, we're still having more sales than the average. So, don't cry. My sort of miniature violin is playing, a little tune there. It really, really is a great time to be a real estate agent because the properties are selling quick as they hit the market. Rental growth is easing but remains well above average, with CoreLogic National Rental Index recorded a monthly rise of 0.4%, lowest since September last year, and an annual rise of 8.2%, lowest since November last year. The slowdown in rental growth is most evident across the unit sector of Australia's 3 largest capitals. So Melbourne and Sydney's unit market has dropped significantly, and they are leading the charge with the slowdown in rental growth. Another factor contributing to the slower rental growth across the unit sector is likely to be affordability. Well, that makes sense. Gets to the point where people can't afford the rents. Despite the slowdown in rental growth across some markets, rents are still rising at an above average pace across most regions and housing types. Nationally, the decade average rate of an annual rental growth prior to the pandemic was 2%, and it's now 3.5% across capitals since early 23, with regional yields holding strong at 4.4. And we all know, if you look hard enough, you can get up to 6 to 10% in the more volatile places like Port Hedland and places like that. So that's interesting stuff. Let's have a look at what's happening in New Zealand. We do have clients in New Zealand, so we always check on New Zealand, and it's quite interesting, actually, to get the contrast of what's happening there versus what's happening in Australia. So amidst a raft of policy changes, the renewed weakness in Aotearoa, New Zealand, home values continued in June. CoreLogic house price index fell 0.5 in June, taking the quarterly change to 0.8%. The month-on-month decline was the largest drop in prices since June 2023 and continues to trend of minor falls seen in recent months. Over the past 12 months to June, New Zealand house prices are up 1.8, equating to 16,000 boost in homeowner wealth. The annual rise reflects the earlier but temporary 3.2 rise in prices between September 23 and March 24. So they had a nice bounce back in that September to March period, but it was like a dead cat bouncing. That previous momentum stalled as a high mortgage interest rates continued to restrict housing credit demand. Each of the main centers recorded flat to falling prices over the month. Although interest rates could stay higher for longer, numbers, restricted borrowing numbers and lending amounts. What else did I see they are up to? The decision with regards to their interest rate should be a quick and easy one for the RB New Zealand to keep the cash rate on hold. The job has been done over there and it needs to get done here, but nobody's prepared to pull the trigger, so to speak. And it will happen. And it's already, I've been blamming on about this for month after month, and it hasn't seemed to have happened. But what goes up must come down. And like I said last month, and I'll say it again, the United States and of course the UK, which is markets that we follow, have already had interest rates hiked, and it has slowed their market down to a relatively normal market, which is definitely better for everyone. But, let's see who pulls the trigger. I believe there should be an interest rate hike, but who knows? Maybe Dan the Man, if he joins us. Is Dan the Man joining us, Anita? Dan the Man from Base Home Loans, our mortgage partner, could join us and tell us a bit more about what's going on in the interest rate sector and mortgages and borrowing. How am I going for time? Probably babbling as I usually do. Okay, 8:27. So Perth, 3,144 properties for sale in Perth. I haven't got the breakdown on what that is, but it's probably about 1,500 homes and the rest units and land. And 645 properties were leased last week, and there's only 2,597 properties for rent, which has increased ever so slightly, which is good, but not good enough. So that's what's happening in the world of real estate in New Zealand. Who wants to comment on their market or the market or a market or anything?